Let's move on to Shoprite. Of course, the market leader. It has had a great decade. Recently reported a 19% rise in first half profit, underpinned by recovering consumer demand in South Africa. Shoprite now operates 339 supermarkets within Southern Africa and 123 in 15 countries outside of South Africa. So those numbers for the 339 was within South Africa. Let's take a look at Shoprite. A nice little fact that I found is that we had the Henry Du Plessis. He was named the Pick n Pay, or Shoprite rather, a champion in terms of the largest pumpkin in South Africa, coming in at 390 kilograms. Nice fact to know, but overall, from a share price perspective, what are your thoughts on Shoprite right now?
Look, Shoprite, what an incredible run they've had. You know, in the last 5 or 6 years, that stock, I was looking it up, has gained by 427%. So it's really just motored from the days when it traded in the mid-20 rands right up to the current level of around 140. So it benefited both from its early move into the distribution centers, more professional IT management. They moved quite hard on store expansion, and they then benefited from the move down market of customers pressurized during the financial collapse of 2008. So they were the one that was positioned in the mind of the consumer as the low-cost offering. So things were cheaper there. So they've really performed exceptionally well. They did go into Africa, as you alluded earlier.
15 countries.
So,
yeah.
You know, they've hardly put a foot wrong. And the only question, I guess, now that they're a 75 billion rand market cap company, is whether they can maintain this breakneck pace.
And we know that the share price has been steaming ahead, but looking at their growth, ex-South Africa, it's also steaming ahead, 21.2% growth in the 6 months to the end of December, and that's stronger than what we're seeing in the local market. So do we need to focus mostly on their developments and their success outside of South Africa? And I'm not going to stay on the African continent. Paul, what are your thoughts, Gary?
I think, Shoprite's obviously been investing in Africa a long time, and you're seeing the returns coming through. But that's it. They've got a very, very dominant position in the local market, and it's got to do also with, I think, a shift in the retail industry from the old style of just being supermarkets to more convenient shopping, picking up the fresh stuff, and not so much so it's just coming and filling a basket. You want to get everything in one place, and you want to do it on your way home from work. Now, Shoprite, it's got ideal locations already in South Africa. So, to see growth just outside, just look for growth coming from Africa, I think you don't need to. I think they've got a dominant position, and I think they will hold it in South Africa. Earlier we were talking about how Pick n Pay is losing market share, but the retail market is expanding, and Pick n Pay maybe doesn't lost market share, it's just stayed the same. Yeah. Where Shoprite is gaining market share in us by attracting new customers. You're seeing also sort of with more the Checkers side of the business. They're trying to market that, they're trying to penetrate the sort of the upper level customer.
Yeah. Do you think that their positioning has moved from cheap to value, and that has really attracted perhaps some customers from the middle income bracket?
I think that's what they're hoping for. I think that's the strategy, is to try and get Checkers to really focus on getting upper level, let Shoprite take care of the lower level. I think they're going to be somewhat strained, but I think it also comes on the back of an entry like Massmart looking to get into food. I think they're really going to, the lower income segment where Massmart is targeting is really going to come under pressure, and that's forcing them into sort of looking at the upper end of the market. But there, I think, the likes of Woolworths has pretty much got it wrapped up at the moment.
So before we get on to Woolworths, and you alluded to Massmart, 51% controlled now by Walmart, and that's really where if we had to do a SWOT analysis, Paul, the big T would come into it, the big threat. What's your evaluation of how this is going to impact their business model?
Yeah, I think it is, because Massmart has that new division called Cambridge, where they're looking for limited lines of stuff. They're looking for locations close to taxi ranks and to areas where big numbers of commuters move through. So I think that is a risk. But the fact is, as Gary says, and I agree with him, this is a country in which we've had expanding access to credit. We've had a general move of many, many millions of households into the middle classes. People's spending patterns are starting to kind of evolve. The economy is becoming more open. So all of them are doing well, and that's why all of them trade on high PEs. Even the laggard of the sector is trading on a 26, 27 PE. So it's reflective of the fact that it's a business niche that people like. Global investors like it as well. because they think, I want to go to Africa, these are stocks that we could buy, and they are not subject to government intervention and messing around with their business model. So there's a whole lot to like about the category, and it's merely a question of picking, for me anyway, the one which looks like it's got the best team and the best model.
Gary, just what are your views on their furniture business right now? Because that has been growing quite well. They've been surviving also in a deflationary environment within that furniture space. They've got 308 furniture stores of a total 1,300 stores, so quite significant chunk of their overall offering.
I think, we've had obviously John Marcus coming out and talking about hiking interest rates and all of that. And I think in general, that's good. That's going to be good for retailers across the board, whether it's furniture, food, everything. As those inflation hikes come through, that is going to improve things for the retailer. So I think probably not a bad thing.
Okay, so let's get your views on Shoprite right now. As you say, that share price has steamed ahead in pretty much in line with the growth that we've seen in Shoprite. So right now, would it be hot?
I'm going to say no, just simply because it's moved too high, too far, not too fast, but too high and too far. And for me anyway, they're now too big to be bought by anybody except one of the global retailers, and we know that there's already been one of the global retailers move in here.
So Walmart's out the picture.
But people have talked about Tesco's and Carrefour, which are respectively UK and French big ones sniffing around. So I suppose another deal of that nature may happen, but you can't really buy stocks on the basis that someone's going to come and buy them. So for me anyway, I think there's a little bit too much good news baked into the Shoprite cake.
Okay, so not hot at the price right now, but basically, if you had to be buying the share price, if you had to be buying the share, would you be looking at any price, Gary?
You're always looking at some price.
Well, I mean, at what price would you be getting
probably
into?
Again, I think maybe sub 130 if you see it come down there. I don't think you're going to. I mean, PE of around 27. It's not particularly expensive. The thing that worries me, but a dividend yield of around 1.2. I think with this you want to get a slightly higher payout as well. So I would say probably sub 130. I'd be looking at it, maybe even.
But
sub
right
120.
now.
Nah, not hot for me.